Yeah. All right. I'm gonna.
Oh,
All right. I want to have a look at. Someone going to fire away, guys. I hope everybody's well. Jared, you're so well. Graham, you're well. Everybody's lekker.
Yeah, I'm just
Yeah.
checking the low prices. That's all.
Hey.
I'm just
and
watching.
going lower and
Yeah.
going lower.
Yeah.
I don't know where to buy.
Hey.
I don't know when to buy.
We're going to talk about that.
Sit
All
on
right.
your hands.
Let me fire. Hey.
Sit on your hands.
Sit on your
That
hands.
way you can't buy anything.
Yeah.
One of the hardest lessons to learn. One of the hardest lessons to learn. You know, on that note, you know why it's so difficult? Is because in our normal work, it doesn't matter what work you do, whether Graham, your work, or Jared, your work, and the way we've been brought up is that the harder we work, the more money we make. The more time you spend at your work, the more effort you put in, the more money you make. And that's the way our brains are geared. And so we want to apply that to trading. And then we want to do 10 trades in one day. And you see your hut. You've actually got to learn to spend most of your time doing analysis and finding the good stuff. And trading. Look, I'm talking trading, I'm talking investing as well. Investing is just a longer term trader. So you've got to spend most of your time doing research and analyzing graphs and looking for opportunities. And that brings me on to another point. A good opportunity, when you look at a chart, a good opportunity is actually very obvious on the chart. If you have to start really looking at that chart and really trying to figure out what's going on here and should I buy it or should I sell it, it means you must leave it alone. A good trade, a good level is actually quite an obvious level. And yeah, it takes a lot of training to, if you can't, if one instrument, if you look at a specific, it can be a specific share or an instrument or whatever, and it's looking a bit messy or it's confusing, go and look for something else. Go and look for something which is more obvious. Julle verstaan wat ek sê.
Yeah.
Not every instrument or not every share is tradable every day. And you've got to understand that. And that's pretty apparent with Bitcoin and what's happening there at the moment as well. And go and look for something else. Go and look for something that is trending, that's in a trend and is not in a sideways consolidation. And you will find it. Because as certain shares go into sideways markets and consolidate, the money is flowing into other stuff. Not your money, but the big guys are putting their money into something else, and go and look for it. You'll find it. All right. I want to talk about confirmations. Let me just share my screen. Has everything that I said now made sense to everybody? Can you kind of gel with it?
Yeah.
Yes.
Thanks.
All right, share screen. Let me go and you can all see my charts now. Hey, you there?
Yeah.
Everybody can see them. Okay.
Bitcoin.
Bitcoin and so forth. All right. Let's I want to just ask you guys. Anybody can answer. Okay, let me draw. I'm just going to use any chart, just open it up so I can draw. I'm just going to draw anywhere. I'm going to draw here. If something's been coming down and we're thinking it's going to reverse now, and when it does reverse, or when we think it's reversed, this is what I talk about confirmation. What needs to happen? What do we need to see here? What are we looking for that will show us that this price has in fact turned? I mean, when the price comes down here, we could have thought the price has turned here. And that's what I talk about confirmation. What can we look for, or what rules can we apply that will enable us to decide that there's confirmation that the trend has in fact turned? I want you guys to tell me. There's a couple of different things we can look at. Anybody, give me one.
Moving averages.
Okay, let me just go to a different color. So in other words, what about moving averages?
Well, if it sort of if it was dipping below the moving average and it's come back and it's moved past it, it's moved through the moving average.
So this moving average typically will be doing something like that. So are you, just repeat what you said now?
So if it moved, so if it's trending below the moving average and now it pushes past the moving average, which was resistance.
All right. So in other words, the price, the moving average is always lagging. So in other words, what you're saying is that the price will actually go above the moving average.
Yeah.
And then I'm on the wrong color here. Then this kind of thing will happen. And now it will stay above the moving average. That's definitely one of them. So we talk about the price going above the moving average and actually holding above the moving average. Okay, that's one of them. The moving average.
But there's got to be a sideways movement. I think if it keeps on going down, we talk about trend is your friend, but for it to move up, there's got to be some noise there, up and down, sideways movement before it goes up. It doesn't suddenly shoot up.
Yes,
There's sideways movements first.
That's a very good point, because we're going to talk about FOMO a bit later on. And I'm going to remember that that's one of the sort of points under FOMO. So yes, the price doesn't just turn around and shoot up. It takes time. They say that it takes time to turn a battleship around. Remember the looking for these things, you aren't going to look on the 15-minute. You're going to identify, first of all, you're going to identify the zone where you think it's going to turn. That's very important. And that zone where we think it's going to turn will be a support. It'll be a prior moving average. We spoke about these things last week, about if there's a correction. In other words, is the ABC correction complete? Where the C leg is equal to the A leg, for example, or it's come onto a moving average which is found as support, or there's a trend line which is found as support. So those are all things that we use to identify a zone where we think the price is going to turn. Okay, where we think, we don't know, where we think the price is going to turn. So, and that's typically where we'll then be ready to buy. But we might not necessarily buy it, because you are, in fact, if you just go out and buy, you're actually bottom picking. You're actually picking the bottom. In other words, confirmation is, if that zone is a buy zone, it's a value zone, something needs to happen there. In other words, something happens there. Well, a couple of things happen there, but it shows you that more people are interested in, more people see this area as value and not just yourself. It's very easy for just you to think you're being smart and you've identified a value zone. But a true value zone, more is going to happen. And it's these things I'm talking about. So the price moving above moving averages is one of them. The other thing that Jacques mentioned now, the price doesn't just turn around and shoot up. What else? Craig, yes, buy still also. Tell us, Wiki. What's one of the first things you'll notice? Or Graham, anybody? What's one of the first things you'll notice? Julle is baie stil. Is julle nog?
It moves. What it does, it'll start moving up, but move down, but it won't move down further than
Yeah.
your last bottom.
That's another one of the points, which yes, okay.
Is that Fibonacci then?
No, one of the first,
No.
most obvious things that will happen is it'll break it. Hold on. It'll get a
Yes,
straight
okay.
line. It'll break a trend line. That's actually one of the first and one of the most reliable things you can look for. There'll be a trend line here, and that's going to break that trend line. The trend line ties in very much with the moving average, but it'll only cross the price will only come above the moving average later on. As I said, the moving average is a lagging, they talk about a lagging indicator. But breaking a trend line is one of the most reliable and first things you'll see. Especially a longer term trend line. A longer term trend line, remember, we're looking for these things typically on the daily or on the 4 hour, the longer time frames. I then typically go in and I start looking on the 1 hour, and I even look on the 15 minutes for smaller little 1, 2, 3, 4, 5 movements, where I'm seeing impulsive movements on a small time scale, and they're very often there. You can see here, for example, you see at the bottom here on this chart, here where this number 2 is, you see this impulsive behavior here. Okay, we're on a daily time scale, but if you go and look at this on a 15-minute, you'll actually see impulsive behavior right inside there. But let's just get back to what else confirms that the price has turned. So breaking the trend line's another one. Jacques, you touched on the other one. When they talk about trends, the definition of a trend is that this is now a downtrend. We're having lower highs. Each one of these is a lower high, and we're having lower lows. Each low is lower than the previous low. Low is lower than the previous low. The high is lower than the previous high. And when the trend changes, one of the first things you'll also notice, the price will now come up, and then it'll make a low, but this low will be higher than this last low. And then the price starts going up, and then it starts making higher highs and higher lows. And now you're in a new trend going up. Okay. So those are quite a few things. And then from an Elliott wave perspective, you're going to start seeing impulsive behavior. Off the bottom, like over here, you're going to see impulsive behavior. And let me just erase this stuff and draw something new. What was I going to say now? When the prices come down and it turns, first of all, it will look like an ABC correction. Now that up to that point is an ABC correction. You all agree with me. So it's broken the trend line. So it makes us think, first of all, we identified the zone. Now it does this, it's made a higher low, and it's made a higher high. So this does look like the trend is changing. But what's going to happen if this is not the real bottom, or this is not the real, if this price still wants to head lower, what's going to happen here now?
I have a 5-way movement. That's a new 5-way. You've had the 5 down and the 3 ABC sideways, and then you'll have 5 down again.
Then it'll carry on. So in other words, the minute you see this price is now equal to that price, or no, let me put it differently. The minute you see that this leg is starting to get longer than this leg, so in other words, it's doing that, it's becoming longer.
Yes.
Is the first one of the also a good indication that this is not a correction, because up to that point where my pen is, it could just be an ABC correction, although it's broken the trend line. It can be an ABC correction, and then it can carry on going down. Okay. So it gives you a false, but if this leg starts getting longer than this first leg, this A leg, this is the A from the A, B, C. So the minute the C leg starts becoming longer than this A leg, it's also an indication that this trend is actually turning. You all understand what I'm getting at. You'll also see possibly impulsive behavior inside here. This is, this might be on a 4-hour time scale or on a daily time scale. But typically, if you want to identify a turning area, you'll start looking on the 4-hour and then the 1-hour time frame. And then you might notice impulsive behavior in here. This will actually be a correction. This will be a 3-leg down. And then it'll start a new impulse going up there. All right. I had some notes here. Let me just bring them. Okay. These are the notes. You can see these notes.
Yeah.
These are the notes I had last week as well. I'll send you guys these notes as well. Where to enter the market. We spoke about this last week. An area or zone where the price is most likely to turn up. Prices above the 200-day moving average. The trend is up. Important that you look on the monthly, the weekly, and the daily charts. You must also look on the weekly, on the monthly and the weekly time frame. You often find that the price, when it might look like a big correction, but you'll actually see the price is correcting, and it's actually just coming onto a weekly 20 or 30 moving average. So you must, and those are very powerful support levels. So you always start with a longer term and look always the 20, the 50, the 20 and the 200 day 200 period. If you're on a daily time frame, it's a 200 daily. If it's on a weekly time frame, the 20 will be a 20-week moving average. Everybody understand that?
Yeah.
So on a weekly chart, your 20, which was 20 daily on a daily time chart, will now be the 20 weekly moving average. So your 20 and your 50 can be very powerful support levels on the weekly and obviously on the monthly. We spoke about joining a trend at a continuation pattern. I put in these 2 notes today. Remember last week I showed you when the price goes into a sideways consolidation, it forms a range, or it forms a triangle. Draw trend lines in there, and then use the RSI for. Let's just go and look at that again, just to refresh your memory. So typically, when the market's moving sideways like this, you go into a 4-hour time frame, and one of the first things I do when the market goes into a sideways consolidation like this is I start looking for a triangle, because that's most of the time what is busy happening. Most consolidations are either a flag, like there's a flag in a downtrend, that's a flag, or it's an ABC correction like this, and then you get bigger periods like this. So one of the first things I do is I draw trend lines, because very often, because you don't know what's going to happen in future, but very often these sideways movements, and also looking at your RSI, these sideways movements are tradable, and you must use trend lines here as well. So these outside lines define the outer limits of the range, like there and there. They're defining the outer limits of the range. And typically when it gets to there, you can sell it. There you can buy it. And your RSI, and also on that 1 hour time frame, go and look, your RSI will be overbought then, it will be oversold there. So let's look for more examples. Here, for example, it comes into a triangle. This is nice last year in the bull market. And also the breaking of a trend line. And you see how these candles, how these wicks, how that gets bought up here. And there it breaks that trend line. And it continues up. So I've spoken about that before, about breaking of a trend line like that. And joining a that's a consolidation. You can see the ABC pattern, and then it breaks it. So, okay, draw range triangle trend lines around the sideways movement, and then use the RSI for the sideways and a consolidating market. Your moving averages, like I said last week, your moving averages don't mean anything in a sideways market. Your moving averages mean something when the market's trending, because it's showing you your support levels. Okay, we spoke about this, about areas that you can, using you to identify the support areas where to get in. What we're talking now today is about this confirmation. So if you're not going to wait for confirmation, you're picking the bottom. You're following your own head. So identify the zone and then look for the confirmation. That's what I'm actually trying to tell you here, is look for the confirmation and then get in. Don't just, because you've identified a zone, don't just climb in, because it might break that zone. And I'll show you on the S&P last week we spoke, and the price actually came down to the 10 and the 20 moving average, and it broke right through there. It didn't even stop. It was like a knife going through those levels. So if you'd bought there, you hadn't waited for confirmation. You'd identified the zone, the area where it could turn, but you didn't wait for confirmation. Okay, look on the daily and the 4 hour, breaking of the trend line, higher highs, higher lows. Price gets and stays above the moving average, like Jared mentioned. Impulsive behavior, it's not just an ABC correction. C starts becoming longer than A. And then look for a triangle 4 and then 5 with divergence. Okay, what I mean with that is typically that I'm trying to think now where's a good example. If the market's trending down, let me see. See, these are all uptrends. I need to find something which is in a downtrend. But yeah. Well, here's an example. This is oil. Earlier this week, I said oil's entered a buy zone. There was a buy zone. Remember, Graham, I still posted it on the group, because this was an ABC correction up to that point. And this is also a very good example of the price. It becomes an ABC, and now it starts becoming longer. So if you put a buy order in, then, and we spoke as well of putting in buy orders. If you typically go and you put in a buy limit at a certain level like that, let's say there, for example, it's a very good idea to modify it and to, in other words, this is going to trigger in your absence, and go and put in a stop loss there. So there you can see the price 65.36. So I'm just gonna put in something, let's say 65, which I know will be below that. You can't just hit enter, you must click modify, otherwise it won't do it. Click modify, and then I can drag it. Now there you can see this is one lot, and you can see immediately when I drag this, you can see on the left-hand side here, as I'm dragging it. Look on the left, look on the left-hand side over here. You can see as I'm dragging it, it's showing me my loss. You can see they're minus $277. So that way you can also decide how much of a loss you're prepared to suffer on this if it goes straight through this level. When you hover on here as well, it will show you the minus 148. So that way you can say, okay, it's that 148 is a certain percentage of my total trading capital, and I'm not prepared to suffer. But typically, if you put in a buy order there, you should have had a stop loss just below that. So at least your stop loss got triggered and the price carried on down. Now this could still be an ABC correction, and this could be now B here. This could be that's an A down to there, then B up, and then this is over here is a 1, 2, 3, 4, and a 5 down to here, and that confirmation I'm talking about. Remember, 3 4s are triangles, and especially if I'm going on a shorter time frame. And if you see this kind of thing where you get a triangle and the price drops below it and immediately gets bought up, you'll also see this divergence over here. This is on the 1 hour. You see your divergence here. So divergence can also be used as another confirmation. So when you get this 3 4 5 and immediately gets bought up, this is already telling me there's a good chance this move has finished. I'm also, can you see that this is a very strong support level here? The price was back there over here. So this is a strong support area. Can you see there's a trend line here as well that's coming right from back here?
Yeah.
So, and as well, if I'm going to take a Fibonacci level off here, off that last bottom, it's also 61.8. So there is quite a bit. So this is actually a good level to buy at. And even if can you guys see what the other possibilities here is? If this is not this could be an A, while we're on this thing, this is an A, B, and a C. So in other words, this could be 4. So in other words, there's my 3, 4 over here. And now it's going to go up and it's going to make another leg up there. If this price breaks convincingly through this level, can you guys see that? Then you see I've put the 1 in here, the 1, 2, 3, 4. This 4 is part of is this 3, 4 of this 1, 2 here, and it's still valid because it's still above this 1. If this price comes through convincingly, or the other alternative is if the price only goes up halfway here and stalls and turns again, can you guys see that this could be an A, B, and the C can be down here? That won't be 4 anymore. That means that this move's finished, that 5 is actually in there. And now what's busy happening is we're correcting this last move up here. And that becomes A. It'll do a B up there. It'll typically only go up 50%. It might even find this channel as resistance. It might find those moving averages which have not turned, find them as resistance. and then it'll do a C leg down to here. So in other words, it's correcting this whole move and not just this last piece of the move. You guys see that? But we'll only know what's busy happening here once the price gets back up here and either goes comfortably. Remember, when the price gets back up here, these moving averages are all going to be sloping down. If it then breaks through these moving averages, there's a level there as well it needs to get through. Goes through here comfortably, then it means it's most probably on its way to making a last leg up here, and that 5 is part of this 1, 2, 3, 4, 5, and then a bigger correction will take place. And that's what's not clear at this point in time, is whether this 5 is there and it's finished, or whether it has to make another move up. And that's the way you approach the market, to reason and to figure out where you're going to buy. Is going to meet me?
Yeah.
Yeah, it's all tricky, eh?
It's tricky. You see this beautiful trend line it broke over here. And this is like a rising wedge. And the S&P has also got this. That's a rising wedge we saw on Bitcoin as well in April. That was a rising wedge, but a slightly different type, but this is also a rising wedge. The price narrows and then it breaks, comes back to test that trend line there, and then it breaks. I thought it was going to stop there and carry on going, but it didn't. It broke right through there. And look how convincingly then it breaks through, because a lot of people are seeing that as just an ABC correction, and they've bought there, and this starts taking out stops, and then it really accelerates. And that's why it's so dangerous. There was no confirmation here. We're talking about confirmation today. Can you see there was no confirmation there that the price was going to turn up? Julle kan het almal sien, né?
Yeah.
There was no confirmation there. The things we spoke about. It breaking a trend line here. It should have gone above this trend line. It should have made a higher high and a higher low. None of those things happened, and it broke straight through. All right. So this is my point here. Look for a triangle, 4 and then a 5 with divergence. That also often gives you an indication that the prices, that last move is mature and it's busy finishing off. And then candle reversals. We'll talk about candlesticks next time. They're not that critical. They also becomes very subjective. So don't worry about that now. The other notes I've put in here is that divergences are warnings of corrections, not necessarily of reversals. So when you see divergences, market can stay overbought and oversold for a very long time. And it's important that you understand that. If you look on this is now on the daily time frame, and you look at the RSI, the point I'm making, there's a divergence over there. When you see a divergence like that, it's a warning that the price is going to correct. It does not necessarily mean that the price is going to reverse and it's going to start a new trend down. I just want you guys to comprehend that. And what I also say, that the price can stay overbought. The price is at the top of this RSI. There it's overbought. There it's overbought. These are all corrections that take place as a result of it being overbought. So don't make the mistake of seeing a divergence as necessarily a major trend reversal. It's a warning that something's going to happen, but most of the time it's just a correction. If this correction, if it then goes below this trend line, that's a different story. Then the trend's been broken, but it'll break something else as well. It'll break a trend line. It'll break a moving average. And look also—
Like the bank.
Break the bank. Yeah, you're quite right. And also very important, the RSI is also a very good continuation, showing you a continuation pattern. You see the way the RSI resets here. Look at, I want to show you guys, they actually call this reverse divergence. So this is divergence where the price makes a new high, but the RSI doesn't. That's a normal divergence. But you also get what they call hidden divergence. Now, hidden divergence takes place inside here. And this is maybe not the best example, but like, for example, you see over here, the RSI is as low here as what it was back here. So the RSI has made a new low, it's come right back into the middle zone. But look at the price. The price has only dropped a little bit. You know, guys, understand what I'm trying to say? Here as well, look, the price has dropped right. The RSI has come right into the middle, actually into the bottom 2/3 zone, like here. But look at the price. The price didn't drop that far. And they talk about the RSI is resetting here as well. If you look at that, the price, the RSI is back down to that level, but the price is higher. So the prices here is higher than it was over here, but the RSI has come back to the same level. And this, not only is the price as the RSI come back down to this level, but look at this price movement. There hasn't been a big price movement to the downside. And that is also showing you that this price wants to continue up, that it's not a trend reversal, and it's merely a correction. A lot of guys use the RSI for that purpose, to show them that was merely a correction, and the price is going to carry on going up. Any questions?
We can see in this one, the trend is upwards.
Yeah, because
If you look at
moving averages,
yeah,
everything's up. Your
something
trend
like,
lines are up.
but if you look at, what is this that you're looking at here?
The S&P 500.
Yeah, if you look at the Bitcoin, you look at Ethereum, and if you look at Anglos, yes, those things they're on a downward slope.
No, not Anglo. Bitcoin, yes, definitely. Look, remember the first thing, the first important thing.
Okay, maybe not Anglo. Anglo is just moving sideways heavily.
I'm going to bring my notes up here. This, when I say price above the 200-day in these notes,
yeah,
that's showing you if the price is still above the 200-day moving average, and a lot of times above the 50, that it's still in an uptrend.
Okay, well,
that's what this is showing.
Anglo is below the 200-day average.
I don't think so. Let me just check quickly. I think I looked earlier on when I saw your.
So I think it's.
And I think I saw it. Let me just get there.
Day.
Anglo, yeah. Here's Anglo. I'll bring it up now. This is a daily time frame, eh?
It's okay. It's just about touching.
Look at my chart.
It's just, sorry, I was looking on the 4-hourly one.
So you can
on the daily one, it's just touching it.
You can see that it's still finding. There's the 200-day moving average. It's still finding it as support.
Yeah.
It's also on the support of that.
Yeah.
This is a very small movement, eh? This is nothing major compared to what it's done here. The other thing I want to mention to you, this is a lot like a Bitcoin. You can see this rising wedge here. You see the bottom line sloping up.
Yeah.
It's narrower here than it is here. This is a wedge.
And the bottom keeps on being higher. The
Yes,
bottom's
but
there.
but it's
higher.
forming a wedge. This trend line here and this trend line here are not
Yeah,
parallel.
it causes a wedge. Yeah.
It's not parallel.
Yes.
That
Yeah,
that
yeah.
line would be parallel to that top line, but it's
So
not parallel. It's
Yeah, right.
just a little correction by the looks of it.
when you see this a wedge, this is the rising wedge in normal technical analysis terms.
Yeah.
In Elliott wave, they talk about a ending diagonal because you're getting 5 wave moves in here, but they start consisting of 3 moves. 1, 2, 3. You start seeing 3 moves inside here. But when you see a rising wedge like this, it's a very powerful indication that the price is going to reverse. And what normally happens is that the price corrects almost 100% of this move. So this price could easily come back down to this level here, which is where the rising wedge started, and where I've got this support line. And even if it comes back to here, it doesn't mean that this stock is now turned into a bear phase. It's merely busy correcting this last move up here. And if you go and look on the weekly now, let's just go and look on the weekly. On the weekly time frame, remember earlier on I said to you then, guys, the importance of the weekly. The same. Look at that. It's also sitting on the weekly 50. Here's 100. This is a 100 period moving average. This one in here. That's also busy approaching this zone over here. So you must always go and look what you're on a weekly and on a monthly, what's busy happening. But I don't see this as a trend reversal. This is a very good. This is coming into a buy zone.
Yeah.
There you can see as well. This is now on the monthly. This blue line is now the 50 period monthly. By the time this price gets to this gray zone here, this moving average is going to have caught up and it will be sitting up here. Can you guys see that? This blue moving average that I'm pointing at here. That's the 50. That's now the 50 period on a monthly. By the time that price has dropped to this level here, this moving average is going to be setting up there. It's going to have caught up, and that will be a very powerful support level.
Good time to buy with a short stop loss. With a short stop loss.
You can even let it come down a bit more. There's a good buy area here, where my cursor is on this level here. There's a good buy level. Why have I got this? Yeah. Can you also see this? There's a trend line running up here. And it's also the 61.8 fib level here over there will also be. And also, the gold price is not really taking off much at the moment. It's sitting in a very sideways market. And the dollar has got a lot stronger. And the dollar is still busy strengthening over the last week. And that can also explain what's busy happening here. You have to think of the fundamentals as well that could busy be contributing to this. All right. Let's go. You guys got any other questions?
What is NASDAQ doing?
All right, we're going to go look at the index. We'll go look at the indexes now. Let's talk about, I wanted to talk about FOMO. And I'm going to use the Bitcoin chart to illustrate that.
Wow. You know, last week you said NASDAQ buy at 14,526.
Yep. NASDAQ.
And
14,256.
No, 526. 14,526.
Well, there you can see. 14,526. That's exactly on that level there.
Yeah.
See what's busy happening.
Should have flipping put in a buy order there.
Yeah. No, I bought it. I'm currently.
Did you?
I'm currently.
More.
You guys remember why I said you must buy here?
Because he said it's going to turn. You got the 1, 2, 3, 4, 5, one
No, but
ABC
why-
correction.
Yeah, I actually shorted it up here. And you
Yes.
guys know why I shorted it up there, because of this,
Yes.
because of that
that's right.
divergence. But why did I say you must buy here? That's my question.
Because it'll break through that bottom trend line.
No, but what was the support here?
Ek weet nie.
Anybody else? What was the support here? Besides this line that I drew in here, forget about
Did.
that. What was the support here?
Well, it's
Let me
because
just-
you're in a bull market.
Yeah, kak, jy
You're in a bull market.
bring it
This is
scores.
just a short-term correction.
Let me just, where's my other, sorry, this is not the charts I normally use. Let me just go and, let me just go put in the moving averages.
What do you normally use?
Average, I just want to put in the 10, which I normally make red. 10-day moving average. Shit, 10. That's a 10. I need the 20. Moving average 20 exponential. There's the 50 and the 200 is down here. So there's remember I'm on a daily time scale now. So there's the 10. I'm putting my lettering 10 opposite the 10, opposite that
Yeah.
line. And I'm putting my 20 opposite the 20
Yeah.
moving average. Then there's the 50 over there. So basically what happened here and this channel, there's something else I want to show you here as well. But the main reason, this 20-day moving average is one of the main supports here. And then of course, this moving average, this
50.
this is the 200. Remember on the daily time
Okay.
frame, this is the 200 sits down here.
Okay.
But the minute I switch to a 4-hour, that's still a 200 period moving average. Not, it's a 200 on the daily, but on the 4-hour it becomes a 200. It actually becomes like a 100 on the 4-hour. But this is still a support level. And then I just want to show you something else. This last move up here, you can see the numbering I put in here, 1, 2, 3, 4, 5. So from this level, either from that level there, you can say it's busy correcting this move, either from there or from there. So from a Fibonacci perspective, if I draw it, you can see it's on the 50 there. And if I pull this down to that level, so it coincides with that low there. You must always think to yourself, if it's doing a correction, what is it busy correcting? At this point in time, this here is correcting this move. This correction is too small to be correcting this whole move.
Yeah.
If this whole move is going to be corrected, then this correction, then I must pull this down here. And then this is gonna be an A, B, which is still possible because look where we're sitting now.
And then
And then
a C at 50.
C, which will very likely come down to this 50-day moving average is a very strong support level. Look over here. 50-day moving average is a very, very important level, especially on the S&P 500.
But then does it produce a new 5-wave uptrend?
You'll only know once this correction's finished and it starts going up here again. You'll only know when you start looking at the structure, this price action, the wave structure, you'll be able to see what's busy going on. Because looking, you see here, there's a 3, 4. But this 4, I don't want to get into the numbering now because that can become very confusing. That 3, 4, this 5 can still be up here. And this can be a 4 here, 3, 4, 5. But if it's going to correct this whole move, it's going to make a bigger correction, but it mustn't come below this level because this can also be a 1, 2. I don't want to go there now. I'm really going to confuse you guys.
Yeah, it's getting confusing, I must say.
Yes. What I did want to show you as well, forget about the numbering. That becomes very complicated, and you don't need to be able to number it to be able to trade it. You look at your trend lines.
You asked what is the support? You said there's something that supports that purchase
Yes.
at that level. What was it?
The Fibonacci, also the 20-day moving average was sitting right here. It actually broke through it, but it's recouped it as again. There's something else I want to show you. When you get a channel like this, and this you see a hell of a lot, draw another line parallel to this. And then go and do this. You see this line, very often when the price is going up, it almost goes up at a 45-degree angle, which is also an indication of a healthy trend. When you start going parabolic, and this 45-degree, when it goes up very steep, like Bitcoin sometimes does, but all commodities, gold and stuff like that as well, then you must know that a bigger correction is coming. But very often indexes go up at a 45-degree angle like this. So there it's running in this channel. It actually broke that channel, but what I do is I go and draw a parallel line parallel to this channel, and then I put it opposite a previous low like this. And you see how it almost came identically onto that level. I can show you lots of examples of this on other stuff on the S&P 500 as well. So all I'm doing is I'm drawing a parallel line, and then I'm making it touch one of the previous lows like that. Also, this leg also got a bit longer than that leg. But you're also watching other indexes at the same time. And if you go and have a look at the S&P 500, so make sure my there, because very often when they drop, when it's a big correction, this is a big move. When you get a big move like that, they move together. They all start dropping together. And this was actually my main support here as well. You can see the S&P 500 came directly onto the 50-day moving average. Here's a channel. You can see this channel that I drew here. And it came onto just above this channel here. But you see this red line here. This red line is actually parallel. Can you see I've drawn it parallel to this channel here? And I've gone and I went and I put it in there so that it's touching over there. And it came virtually straight onto that level. And also this would have been a fib level. There's your 61.8 of that level. And obviously, if you pull it further down to the bottom there, it's like a 50.38. But that's that trend line there. So what I'm saying is you don't have to learn to count. It does help at times, but and breaking, you see this trend line that it broke here. That trend line that it broke. Even if you hadn't shorted it there, remember, here's your divergence over here, a massive divergence. That high there, and look how much lower the RSI is. Even if you hadn't shorted it over there, you could have shorted it when it broke this trend line, came back up. And you see that's a very small move. And then it really breaks. You could have shorted it over here. Having a look at what's busy happening now and trying to...
It's hard enough to buy, never mind short.
It's very difficult to short the indexes. You really got to be so careful, because I promise you, it'll be up in your face and slapping you through the face very quickly.
Oh, let's not do that.
Don't do it. It's not a good idea. It's like trying to short Bitcoin last year until April. There's a time to short something. There's definitely a time to short something. But like Bitcoin, over the last couple of months, there's been wonderful shorting opportunities. But don't short something when the trend is up like it is at the moment. This trend's up. You rather wait. You wait patiently, and when it dips into a buy area like this, you buy. Because the other problem you're sitting with is when you've shorted it here, it clouds your vision. And because what you've got to do is you're in the short. When it gets done here, you've got to close that short, and you've then got to buy. But it screws with your head. From a psychological perspective, it's very difficult to do that. Whereas if your powder's dry, you're sitting on your hands and you're watching this move, and you're looking at these trend lines, and you're looking at your fib levels, and then you see a reaction. If you look on the hourly time frame here, you can also see, look at this reaction off this bottom here. That's confirmation that this thing's got legs. Something more important's going to happen. The confirmation I'm talking about today. That big candle there is confirmation. Now to decide what's going to happen here is I'll put in my Fibonacci here. It's already come back up to the 60%. Can you also see that's a 10-period moving average and the 20? This could be now, this could be a 1-2, and now it's busy. Now it's going to carry on. Now it's going to make a 3, most probably up here, 3-4, and it's going to go on, and it's going to go on to a new high. That's the one possibility. The important thing is that you're always busy looking at what the other possibilities are. Don't get hung up on one possibility that you've seen. You've always got to be looking at what are the other possibilities. And the other possibility here, obviously, is that this is an A, this is a B, and this is a C up to here. And just because this is behaving very impulsively doesn't mean that the C can't end, yeah? Don't fool yourself. You see now it's breaking through the moving averages as well. So, and you can also see that this length, look at this, the length of this move. I'm measuring it there, and I'm measuring it there. You can see it's already becoming longer. So I must be honest, at this point in time, and considering that we're in a bull market, this looks like it could go on and make a new high. But this is not the place to try and get in. This is where you could have got in. If you hadn't bought here, there's confirmation. You got this big candle. The price comes back. Look at this wick here. This is where you could have bought. Here somewhere. You can't buy here now. You're too late. But so now we're watching what happens here. And most probably because this leg is now equal to this leg, and we're at the 61.8 level, the other thing I often do is draw a trend line in like that, off the tops like that. So it has to get through here. It has to get through the 10-day moving average. Remember, the 10-day moving average is now a resistance level. This 10-day moving average yesterday was sitting over here, and the 20 as well. And I actually bought over there, and I got out in a big hurry because of this price behavior, and it went straight through. And look at that flag it made there. You know, you could have thought, okay, the correction's over because this has come back to this level virtually, the previous 3-4 year. It's a good buying area. But can you see there's no confirmation there? Look at this pisswilly little reaction here, and look how it drops again. So even if you bought here because of this level and because of whatever went on in your head, this is not confirmation that this price is turning. In fact, that's a flag. That's a continuation pattern to the downside. So now that 10 is sitting there, the 20 is sitting there. It has to get through this level, but it's most probably going to stall here, and it's most probably going to run sideways here, and then it's going to decide whether it's going to go through and make a new high. But I can tell you, if it makes a new high here, I will definitely be shorting it, because think now for yourself. Even if I go into the 4-hour time frame, look at this RSI. Even if this price gets up there to that level, this RSI is most probably going to get up to there. And this move is very mature. As lank in die tand, soos hulle sê, baie lank in die tand. So a lot of guys will be shorting over here, even if it gets up there.
So it's not showing.
Sorry,
It's
yeah.
not showing a buy situation at the moment.
No, this is where you should have bought.
It's a wait and sit on your hand situation.
Too late. This was the buy area here when it came onto this 50, and when it found support on these trend lines here, that's where you should have bought. And if you hadn't bought there, you should have bought over here when it dipped back. Because if this is not an A and a B and a C, then this is a 1.
Hello.
And it's a 2. You there, Graham?
Yeah, I am.
And now it's going to make a 3, and then a 4. Well, in fact, this 3 will be higher up. It'll might probably be up there. Let's just move these. Let's move this up here. Because remember, this is now almost equal to this leg. This blue here it's equal to that leg. Now your third leg is normally longer, so you'll probably get a 3. I'm saying now, if this is going to go up to make a new high, this will be a 3, maybe even higher up over there somewhere. 3, a 4. It'll get above this 10 and the 20. This won't be a C anymore. It won't just be an ABC up to there. So then that scenario falls out the bus, and we say, right, this is not an ABC anymore. I'll go take these away. And I'll say, right, this is now a 3. That's if it gets up there, obviously. I'm not saying it is. I'm saying if it gets up there, 3, and then it starts making a triangle here. If it makes a triangle here, just below this, on this is resistance, eh? If it makes a triangle here, you can get in here for this last move up to there, but you'd have to have a tight stop loss. Your stop loss can't be down here. Your stop loss must be just below this triangle here. You guys understanding what I'm saying about these 2 different scenarios? Nobody knows what's going to happen. All you can do is look at the price action and let the price action help you decide what is busy happening here.
Jacques, I mean, how do you do all of this scenario planning and analysis on multiple stocks each day? I mean, it's
it when you can see last week Thursday, for example, I said to Jacques on the Nasdaq, I said to him already, there's a buy zone over here.
Hmm.
So, and you know, how long does it take to draw in trend lines? It literally takes 10 minutes. And you
Yeah,
can
but I mean-
identify buy areas by looking at a chart for 15 minutes. You can already identify buy areas. And you know when it gets there, then you can set an alert, put an alert there. So when the price comes down there, I don't like putting in buy orders because that means I have to put in a stop loss and it's a good chance it's going to break straight through there. I like to put an alert if I'm not watching it every day. Okay, I am watching it every day, but I'm not talking about you guys. You're not watching it every day. You put an
You
alert
would be
there,
surprised.
okay?
You'd be surprised.
No, I know you. I'm not including you in this.
Every hour. I watch every hour at least.
Yeah. So Jared, am I answering your question?
yes, thanks.
Here's a trend line, eh? You see this?
Yeah.
You see
Yeah.
why it's stalling there? There's the trend line. This is now the Nasdaq, eh? There was a buy area. This could be an ABC. A, B, but also I'm watching all the indexes at the same time. I'm not just watching one index. So this now could be an ABC up to here somewhere. And then it could start a move down. This at the moment is very far off for 1, 2, 3. 3, it must get through here. Then I can say 3, 4. And here's the 10-day moving average. Here's the 10-period moving average it's stalling at as well now that it has to get through. And also, obviously, if you're going to draw a fib level off the top there, you'll see that it's a 50%. 50%, then it'll stall. If it gets through the 50, then it'll stall here. If it gets through there, it'll stall there. So if it gets through here, that's typically where you're going to find a 3. That's still too quick. It'll most probably be a 3, 4, and then a 5. But somehow, yeah, let's see. Let's see. We'll only know later. The price action will show me what's busy happening here. This over here, you see this movement down here. I'm just gonna, that could be an A, that could be a B, and C could be down here. Can you guys see that? I'm gonna go on to the, if this seriously stalls here and starts rolling over, this could be correcting this whole move and not just this last move here. So far, it's correcting this move. But if this rolls over, it could come down here. And obviously, without me having to even tell you guys now, that'll be a great buying area because it's a 50-day moving average. And if you take it from the bottom, you see it's the 38%. 38%. Something that's in a bull trend loves turning at the 38% and carrying on. And then from a numbering perspective, then this could be one. No, let me not even go there. Let me not go there. You don't need that. Just look at what's happening with your trend lines and have a look at what's happening with your price action. But this was a place to buy. If this starts rolling over here and stalls, I might, what I bought down here, I must probably get out. Close. But I need to see whether this is going to extend and become a 3. At the moment, it's just an A, B, and a C up to there so far. Is what I'm seeing. All right, we've been going for an hour and a quarter, and maybe we must talk about FOMO next time. Let's talk about FOMO next time. All I want to show you is, I want to show you something here quickly. Jacques actually brought it up earlier on. But let's discuss it in more detail on Thursday. Then we'll discuss this whole slide. But the one thing he mentioned earlier on was that when the price turns, it doesn't just turn and shoot up, especially when it's done a big move like this, when it's done a serious correction. You know, if it's small corrections like this, you can say the price shoots off again. There's a big candle in it and it takes off again because we're in a serious bull market. I'm just going to go show you guys here. I'm going to go to, you see where I've drawn these two blue lines. You see this blue line here is a bottom that was formed in 2018. There's my date, and that's a low. What I want to show you is that off this low here, this is after a serious correction. Off this low here, this price doesn't just shoot up. For a start, yeah, we are here now. Can you guys hear me? I see something about my internet's unstable. Can you guys hear me?
I can now hear you.
Yeah, you see, this is a bottom that was formed in 2018. Can you see this price doesn't just shoot off? This has to turn around slowly. It has to start coming above. That's a 10 period. This is on a daily time scale. It has to get above the 10-day moving average. It has to get above the 20-day moving average. There it's below it again. There it comes above it. Eventually it comes above the 50-day moving average. And this is when the guys really start climbing in. When it comes above the 50-day moving average, it starts showing them that things are healthy again and that this correction is over. But look how long this takes. This takes from December through to there is 2 months already. That took 2 months off the bottom. And then it took another month before it really starts going.
Sorry.
You can look at the previous correction as well. That was 2018. I'm going back. Yeah, I'm going back. I wanted to show you something else there as well. Here's another.
Sorry.
Here's another bottom. This was in 2015. A bottom. Look at the price comes up. It has to get above the moving averages, has to get above the 50. There it finds resistance, it drops back down. There it actually made the 2, because remember, the 2 can't be below the 1. So 1, 2, then it starts taking off. But look how long this took. There we're sitting January 2015. There we're sitting August. This took 8 months. But look at what happened prior to that. Prior to that, this was a serious correction. Okay, you can't see it now, but if I zoom in there, you'll see that this price was much higher. It reached a peak here, a very high level, high up. So the price takes time to turn around, especially after a big correction. And that's why with FOMO, you're actually exhausting yourself, and it's costing you money, and you're pulling your hair out, and it's really freaking your brain out. The market has to decide where the bottom is here. You can't decide for it. But when it does reach a bottom here, there's going to be confirmations, and there's going to be lots of time to get in. It's not just going to bolt off here. We'll talk about FOMO in more detail next week, but I hope you the little bit I spoke about it helps you at least. This is what the guys are predicting somewhere down here, and this is a ending diagonal that they're talking about. that it still has to come down here. You guys got any questions?
Yeah. Why do you say we're in a bull market when you look at what's just happened in the last day or two?
In what?
Or crypto?
Which one?
No, see, okay, crypto.
No, we're not in a bull market. We definitely
Exactly.
not in a bull market.
Good. No,
sorry.
then that's clear. No, then I'm
No,
with you.
look at
Then
this.
I'm with you.
We're below the 200-day moving average. We're
Yeah,
below the
yeah.
50. We're below the 10 and the 20. This
Yeah,
price,
okay.
this price has to find a bottom. Then it's going to start with some kind of impulsive movement. I'm not saying this is the bottom. The bottom might be here, but then it's going to have to start confirming, and it's going to have to start showing you some things, and then it has to get above this 10-day moving average, which at the moment is sitting there. But yeah, you can
No,
clearly
thanks,
see it's
Brilliant.
sitting in a bear market just by looking at the 200-day moving average.
Thanks.
I think what we're talking about is the indexes. The indexes are all in a very clear bull market because of where they're sitting in relation to especially in relation to the 200-day moving average. Just have a look at that. You know, this is on the daily. Look where the 200-day moving average is sitting on this S&P 500. And obviously at some stage, I look at analysis of quite a few guys. At some stage, this price is going to correct down to here. And it's
Jock, I
actually going to
can't I can't see a graph on
You've
my
got to share
screen.
your
I
screen.
can just
I've got to share my screen again. Let me just share it quickly. Share screen. This is the
Okay.
the S&P 500. There's the 200. We're on a daily time scale. Eh? There's the 200-day moving average. You can see that was the COVID drop there. Once it got above this 200-day moving average, first of all the 50, first of all the 10 and the 20 over here, it had to get above. Then it eventually got above the 50, then above the 200, and from here it just goes. But look how healthy this is as a bull market. We're sitting above the 200. We're sitting above.
Way above.
The point I'm trying to make is at some stage that could be a 1. This could be a 2. This 3 is sitting somewhere here. It might be where it rejected last week Friday. It might be sitting a bit higher. At some stage, this market is going to do this 3, 4, and then we're only going to go up to the 5th. This will be an absolute brilliant buying opportunity over here.
Well, how do you set yourself an alarm clock when it happens?
No, you look at that. You mustn't be lazy.
You have to.
And you must look at your charts.
Mustn't be lazy.
Mustn't be lazy. You must look at your charts.
Haven't they devised something that rings a bell when it's time?
Yeah,
That's
that's at the casino when you hit the jackpot. There's lots of bells.
It would be easier sleeping then.
Yeah. No, I know it's a problem.
so. What level was that?
No, forget
so
about it. It's
was
long
that,
before
was that NASDAQ or S&P 500?
It's the S&P
That's
500. It's still a while
I
before
think it's
something gets there.
3903.
And you know why?
3903 at
And
4,000.
you know what else? That level is right about 4,000, and that means that the market would have done a 10% correction, and a 10% correction on the index is a healthy correction. There's nothing wrong with it. It doesn't mean it's crashing. It just means it's a healthy correction, and the market needs it.
Yeah. But it's not going to come down to March levels at 2.2.
No. There are some guys,
Who knows?
but you must realize once it gets
Once it gets.
you can see the screen again.
Yeah.
I'm going to go on the daily. You know, this I put in this black 1, 2, 3, 4 down to here.
Yeah.
Now I'm saying that this 3 is still above. I'm going to go on the 4-hour time scale. I'm saying that 3, that black 3 is still up here somewhere. Okay, and that we still have to get up to it before we get this bigger correction. But there is always the possibility that it's in here already. We don't know. But this price action is going to show us. But this wasn't a 5-wave move down. Can you guys see that as well? Can you see this is like an ABC?
Yeah.
This is not a, over here, I'd actually put in a label. I'd put in a 4 over there. Let me just take this out for a minute. Yesterday, I'd put in a 4 over there. And I'd put in a 3 over there. Let me just take all this stuff away. And it started looking to me like 1, 2, 3, 4, and then 5 would have been over here.
So it's defying all logic.
5 would have been there. That could still be a buying opportunity because remember, after 5 waves, you're going to have a correction.
ABC, yeah.
So then that after 5 wave down, beautiful buying opportunity. And you would have got a divergence here on the RSI as well. And I was hoping today to buy down here, actually where this buy order is sitting, where this buy limit's sitting. I wanted to buy there. I thought it would come back and retest that. And the next minute over here, I was waiting. It started dropping here, but I'd already put in 3, 4, and 5 over here.
Yeah, it looks more like a
So
ABC.
this didn't. That's an important point here. This didn't make a 5-wave move down. This did an ABC, and that's why it's taking off like this as well. And so that 4 of mine got invalidated. They talk about validating and invalidated. So that scenario of mine got invalidated once it broke above here. So, but this could still be, even though this is not a 5-wave move down, it could still be an A and a B and a C. Yeah. But there's a good chance if this had made a 5-wave move down, then you must start looking carefully, because then it's going to make a 3-wave move up, and then it's going to make another 5-wave down, eh?
Mhm.
Jacques, I must go now.
All right.
Okay.
Nice. Lekker.
Thanks, man. Keep well.
All right.
Okay.
Ciao,
Cheers.
right?
Ciao.
Yeah,
Bye,
cheers,
everybody.
guys.
We'll talk again on Thursday.
Okay.
Yes. Okay, Jock. Let's meet for coffee tomorrow.
Yeah. What's tomorrow? Wednesday. Yeah, we can. Yeah.
Come.
We'll talk on
Pelican.
WhatsApp. Yeah.
Okay.
Craig, if you got any questions, you almost look like you want to ask something.
No, I'm good, thanks.
You no questions.
No, well, good, thanks.
Okay, you obviously saw the charts that I posted about Ethereum and Bitcoin this morning,
Yeah,
about where the
watching and
possible
waiting, yeah.
where the possible levels could be. Yeah.
Great, thanks for that. yeah.
Mooi.
Around
Okay,
about
see you guys. eh?
1600.
Cheers, eh?
Okay,
Okay.
ciao. eh?
Yeah.
Ciao, Craig.
Bye.
Yeah.
Bye.
Bye.
Okay, Jacques. Yeah, we'll talk on WhatsApp tomorrow morning. I just want to see if we go for coffee. It must be around about lunchtime. It must be around about 12ish.
Oh, do you want midday? Okay.
Yeah, midday. In the morning,
Okay.
I need to suss out what's happening and so on. Yeah,
Yeah, no, that's fine.
maybe we go to Muriel's or something and have a sandwich there.
Okay, where's me? Oh, yeah. Good idea.
Remember, there at the harbour.
Yeah. Yes.
Oh.
Okay.
Okay.
Okay, boy.
Okay.
Chat to you.
Keep well.
Cheers,
Have a
eh?
good evening.
Okay.
Okay.
Ciao. Bye.
Bye.